Hi everyone and welcome to today's morning report on Tuesday the 29th of March with me, Rich Perry, market analyst at Hand Tech Markets. The European trading session has got us to a positive start to a certain extent, although there is sort of like a mixed outlook across the asset classes. You've got the dollar strength that's still resuming actually, despite yesterday's weakness that came on the back of the slightly disappointing PCE data. We've seen a sort of a dollar strength move across the forex majors today. Euro, sterling, and the yen also all weaker, just slightly weaker, but still it's enough to put pressure on the commodities complex, with oil price 1.5% lower. And also gold and silver both lower as well. So we're seeing some weakness through those commodities, and I think that that may well just be a bit of a drag on the equity markets as the day goes on, because chances are that with that those commodity markets under pressure, you're not going to get too much positive sentiment coming out from the markets. Now you've got Janet Yellen speaking this afternoon, and she could have an impact on these markets. But just before that, let's just look at that dollar, which has had, you got that bearish key one-day reversal actually on the bar chart, and that is just reflective of this slight correction that we saw on the dollar yesterday. Just resumed today, but a bit of a mixed outlook really. I mean, you're looking across the treasury markets, nothing really in terms of direction on the 2-year or the 10-year. So you've pretty much sort of fairly sort of flat, I suppose you'd say, or mixed in terms of the outlook. As I said, the commodity prices are under pressure. You've got the copper price coming off lower, and also the interestingly, the oil price again is down today. That's 4 days in a row of negative moves on that oil price. So just something to keep an eye on there. Now, as I said, you've got Yellen speaking this afternoon. She's not likely to do anything major in terms of rocking the boat. She generally tends to play a pretty straight bat to these sort of public appearances that she makes, and it's unlikely to do too much, because I think the markets are also going to be focusing on payrolls towards the end of the week as well, which could have a big impact on the markets, certainly in light of the rather hawkish shift that the Fed speakers last week gave to the market. It'd be very interesting to see how that payrolls report comes out on Friday. So what else have we got to look forward to today? Well, we have the S&P Case-Shiller Home Price Index, house price index in the States, and that's expected to just creep slightly higher to 5.8%, so that would be dollar positive or dollar supportive today. And also we've got the consumer confidence, that's expected to come up to 94.0, so again that would be dollar positive. So that would be just generally speaking, the data that could come out today could well be helping the dollar. So that takes me on to my chart of the day, which is the Kiwi dollar. Now, the Kiwi dollar, actually, interestingly enough, the Kiwi is the biggest outperforming of the majors today. It's actually up against the dollar, performing nicely. And we had what I saw yesterday as a bullish key one-day reversal, or a bullish engulfing candle, where you see a new low posted in this little trend, but then completely turned around to close above the previous day's high. Now, the only concern, well, the concern I would have with this is it's come within bank holiday trading, so perhaps a little bit less in terms of decisiveness or conviction behind the trading, but certainly that's continued today, and that has helped to sort of improve the prospects of this pattern being a positive pattern that we can go with. Also look at the momentum indicators. That stochastics is beginning to turn higher. That's happened on several occasions through March, and on several occasions it's sort of been the harbinger for a bit of a run higher. Also, the MACD lines are still positive. RSI again supporting around the high 40s. Interestingly, seems to be what it has happened throughout March. Every time it sort of dips back to 40 and turns higher, that's a positive move. So it's generally speaking, you could see further tests higher. Now, if you see a close above 67.50, which is basically this resistance here that we've had in place across February. So that's a bit of a pivot line, 67.50. If you see a close above that, then that reopens the upside. And if you look at the intraday hourly chart, you can see this sort of move going on here. That's an old line that we don't need anymore. Um, you see this sort of rolling bottom turning around. We've seen a move above, arguably a pivot line around 67.20 as well. Sort of dip back into that. The overnight low today, 67.10, I think it was. I'll zoom in here, I can find it. Let me just zoom in properly. There you go, 67.05 actually. But it certainly suggests we're seeing some continued gains. Now, you look at the hourly momentum, it's just sort of rolling a little bit, so you might see a bit of a pullback towards 67.20. I think that would be seen as a chance to buy though. I think this is an improving chart now, and certainly what we've seen is this 67.60, which was the intraday high today, so that was above 67.50, which is that old resistance. So I think this chart is a building chart now. It's building support. It seems to have sort of turned the corner now in this correction and starting to improve once again. And as I said, I think if we get a close above 67.50, that sort of reopens the upside once again. You can look higher towards the next resistance levels that come into play. 67.95 was that reaction high on the 21st, but then subsequently you're looking out towards 68.75 as well. So some interesting turnaround possibly in play on the Kiwi, and certainly with it continuing to outperform today, that is a positive for that market. So I wish you good luck in your trading today, and I will speak to you later. Thank you.